You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, welcome back to the Option Block, everyone's favorite. I know it's my favorite. Hopefully, it's your favorite as well. Bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of unusual activity, a little bit of education and some strategy, some looking ahead into the future. Wrap all that up with a dash of your listener questions, and you have the tasty stew that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. No shortage of fine programs for you guys to check out, including over 500 now. 502, I believe, with today's show. 502 episodes of the Option Block for you guys to consume at your leisure, no matter what device, no matter what platform, what method. If you like to download, if you like to stream, you want to listen on the go on your mobile device, you want to listen on your computer, you want to listen somewhere in between, maybe on your Alexa in your kitchen, whatever the case may be. I've done that. It's pretty fun. You can check us out pretty much on any platform you like: iTunes, TuneIn, Stitcher, via our mobile app, and as well, of course, it's all available via the mothership as well, theoptionsinsider.com. Also got a lot of great breaking news from the options market, unusual activity, education, all that fun stuff, analysis of trades, all that good stuff over there on the website. And of course, top left corner of the page, that's where your radio journey begins. Click on the Insider Radio Network tab. All 13 programs pop up, and you can download or stream till your heart's content. And of course, we have the new wrinkle we added exactly a week ago for the 500th episode Palooza. And so far, it seems to be catching on. It can be pretty popular with people. It is indeed our live stream. We are streaming this live right now via Mixlr. So if you're listening after the fact and you're saying to yourself, man, I like to catch these guys live, it's kind of fun to see how the sausage is made, get a glimpse behind the mad machine that is the Option Block. Well, you can do that every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. We streamed an options boot camp this morning. It was really fun with Dan Passarelli over there answering a lot of your questions. By the way, and a lot of you like to listen, and I know a lot of you are asking, hey, how do we post questions in the chat and stuff? You have to have a Mixlr account to do that, MIXLR. So grab the Mixlr app or go to the website or follow our link. If you follow us on Twitter, we tweet out the link all the time. Just click on that link. That'll take you to our page with our chat room. You can listen and stream and do all that kind of fun stuff without an account. If you want to actually post questions and chat with us, then you have to have a Mixlr account. It's all free. It takes 2 seconds. But if for some reason you don't want to go through that hassle, some people are asking us that today, you can still get us via the other manners and methods. Hit us up on Twitter, hit us up on Facebook. You can hit us up on email, but if you want us to try to answer it in time on the show, probably a better chance to hit us up on social media like Twitter and stuff, and we'll see if we can catch it and route it to the show in time. Today is Listener Question Day, so get those questions ready. We got some time for those coming on a little bit later on the show, but first let me introduce my cohorts, my partners in crime in all things OB. Starting in order of proximity, the man who gave me the gift that keeps on giving, the St. Charles tourism brochure, which is still on my desk, a treasured item, if you will, Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program, sir.
Always happy to be here. You know, we're living in a wonderful time when it takes probably 5 minutes for you to explain all the different mediums with which people can actually hear us.
There are exciting times indeed, sir. We're all excited here about the live stream. It's good stuff. And also joining us via the magic of technology from much farther away than St. Charles, Illinois. You know him, you love him as the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Andrew G., welcome back to the program to you as well, sir.
I feel bad I haven't sent you a travel brochure of all the great things happening in Maine.
You've sent me great photos of your ice rink. That works.
That's true. Well, the thing is, the St. Charles travel brochure is probably like a half a pager, quarter pager. The main one's probably, is like 300 pages long. There's so many things.
Mark, take a quick look and tell them how many pages are actually there.
I did just grab it. It is a whopping 58 pages. So there you go.
58 pages for St. Charles.
They can accommodate groups up to 3,500.
Holy God.
So there you go, sir.
I had no idea Tucson's house was that big.
You can go. You too can go to Lynn's Garden Restaurant, 2400 East Main Street, St. Charles. There you go. I'm just learning here.
One of these days I will visit. I think you guys got some kind of river or something, don't you? What do you have? The Joliet
Mark committed to it. Next time when you're in town this summer, we are doing a show live from the Fox River on my boat. We are doing it.
There we go. I think fishing poles and beverages, that sounds great.
Now you're up. Now you're talking Andrew speed there.
Yes.
There we go.
You just got my attention, Mr. Tucson.
Well, hopefully we got a lot of people's attention and get some people in the chat room. And if you got questions, let us know or hit us up via the usual media, social media, whatever you like to hit us up with, and we'll see if we can get it routed to the show in time. You got a few more minutes for the mail block, so start thinking about those questions as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we tell you what caught our eye, what was lighting up the old markets today. And it was another interesting rally day. Yesterday we had a bit of a sell-off, and it kind of turned around as we are wont to see these days. And all of a sudden the bulls decided they were in charge for the latter half of the session. Today it was pretty much all bulls all the time. Most of the major indices closing up on the day. S&P up an even 1%, or about 19.5 handles or so. The Dow up a wee bit more, about 1.2%. The Qs laggard on the upside today, only up about 0.75 of a percentage point or so. And of course, with all this rallying, all this green on the screen, that means VIX kind of took the session off about 1.25 handles there to about 19.5 or so in VIX cash land. Let's start there. Mr. Rock Lobster, last time you and I were chatting, we were talking about, we were flirting with some record closes for the year here in terms of lows on VIX cash. And as we are today, we're not at that level again today, but we're pretty darn close. The record, I think, was close was about 19.38 the last time we were chatting here on the show. And today we're hovering right around 19.5. So just a bit above that, but still flirting with at least lows here for 2016 out there in VIX cash land.
Also I'm looking at, they're crashing the vol futures here at the end of the day too. So whatever little reticence they had seems to be, I think we're kind of at our vol lows, Mr. Longo. We are in smack daddy land for volatility right now. So
technical term, smack daddy land.
So yeah, on Monday we were talking about, they launched up there. We had that little, what Japan announced more negative rates on Monday. You had the dopey rally, and then after that, it's always the sadness the day after, and then they realized negative rates isn't good. And now we are right there again. We are right at the same levels once again. I find that very interesting. That's all I'm going to say there. I find it very, very interesting. The volatility seems to want to leak out of the market. Like I usually say, it kind of things go in threes. And it seems to be shaking the oil thing off. The fact that they keep talking about all this production cuts. Looks like maybe we found some kind of bottom. The Fed has not said anything in 2 days, which is always good for our market, since one day they're saying we're thinking about negative interest rates, and the other day they're going to raise them. So That always causes some issues. And I don't think we've had too many bad currency surprises over the last 2 days. So until one of those things happen, that will cause us, I guess, to sell off once again.
A lot of technical terms in there for us to unpack there, sir, including
tons.
Lots of technology there. So hope you can keep up, listeners, with the dense terminology the Rock Lobster is swinging your way. Let's turn our attention closer to home now. Uncle Mike, by way of, what was that place? I just saw the name of it. Lynn's Garden Restaurant beaming in from today in scenic St. Charles. Uncle Mike, what caught your eye out there in today's activity? S&P's rallying, your shiny stuff rallying, even your wee bit of holdings in Apple rallying. A lot for you to catch your eye on today.
All sorts of things. Now, I think that, just to kind of add to what Andrew is saying, in order for us to get out of smack daddy land in the S&P, I really think that we're getting closer to the 2000 mark. And until we can really get past there, it's funny, I remember probably when we were first at the 2000 mark a couple of years ago, I just remember saying it seemed like for weeks that I kept saying, we got to get over 2000 before we do anything. And we just sat there for a while. So from what I'm seeing, I think that we've been in these kind of just puttering around in the 1800s and 1900s of the S&P. And we kind of went down super fast. And now we're just kind of sitting there in some ways. I'd like to really see us get above 2000 before I really go into rally ho mode with what I'm doing. Don't get me wrong. I am still the ultimate permabull, but I'm still very much a cautious permabull until we can pass that 2000 mark.
And speaking of bulls, you were a bull in gold. You then got stopped out. Have you put anything else back on out there in GLD? Maybe writing some downside puts to establish a level to get back in? You're still waiting and seeing out there?
Still waiting. I'd like the opportunity to be able to sell like maybe a 108 or a 110 put on GLD to get back into it in some way, shape, or form. There will come a point to where if we do go above the 120 mark on GLD, I will chase it. I'll chase it with much less money than the full amount, of course. But for right now, I'm still taking a break because I think the 120 mark is very similar to the 200 mark in SPY in that we went up there for a little bit and then we came right back down. We're just still kind of puttering around a little bit. So I would like to see some type of direction. I'd like to see gold do something besides just what it's doing.
Yeah, I think you're stealing a line there from the Rock Lobster, doing something. Do you take umbrage at that, Mr. Rock Lobster?
I was going to, but since he's offered me beer and fishing next summer when we go on the option pit excursion, the Palooza with the Option Insider Global Media Conglomerate. My umbrage meter is turned down a little today. It is. It's turned down a little, I have to say.
You do seem.
I mean to do it in an endearing method, though.
It was very nice. It was nicely done.
Why, thank you. I take umbrage with Longo for trying to even just start stuff between us. He makes fun of us people that aren't in the city of Chicago. So I think you and I should take double umbrage on Longo.
Yes, the country folk. Picking on the country folk. The hayseeds.
That's right.
It's my job to stir up the umbrage. I'm the host, after all. If everyone's happy and complacent and smiling at each other virtually here on the show, then I need to turn it up a little bit of crossfire, a little bit of Novak, throw a bomb into the woods, see what happens there. Speaking of bombs, good old SeaWorld reporting, I should say, before the bell today and just taking it on the chin. I guess investors not liking all the management changes over there, the fact that they're sneaking into animal rights protests with their infiltrating spies and whatnot. Stock taking a hit intraday after reporting earnings before they open off about nearly 2 handles, or about 9%, hovering right around the 18 handle out there today. Not surprisingly, given all that action. It actually wasn't surprisingly the most volume day. They've been averaging about 7,200 contracts a day, only doing about 6,300 today. So light on the volume, which is surprising, but the lion's share of it, about 2.5 to 1 puts over calls. Not exactly surprising given the fact that there's a big sell-off in the making out there. It's hard to see, like we were talking about with some of our other names last week, kind of hard to see the road ahead right now for the folks over there at SeaWorld when your entire gig is based around animal shows and people seem to be up in arms about those animal shows. It's kind of hard to see a way forward. That said, Mr. Rock Lobster, what were your folks in the chat up in arms about today? Were they watching SeaWorld, or were some other names catching their eyes today?
It was kind of a boring day in the chat. We're mostly looking at
Uh-oh, you called your chatters boring. I know some of them are probably listening right now, so you just offended them live, sir. I think one of them just tuned out. I could see it. Bam, there you go. He took his umbrage and left.
Boring as in like things that were really moving. We were really kind of flat and sort of up and down and off and on most of the day. Mostly, I think the consensus was just trying to sell volatility, mostly in the indexes, maybe buy some puts in the vol products, stuff like that. Not super exciting, mostly just looking at ice melt, but that at least on kind of the shorter term trade ideas, that's what the ideas were.
Speaking of ideas, let's move on into some. I actually want to save some more time for some questions a little bit later, so we'll get to those sooner rather than later. So that means with that, let's keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, welcome to the Odd Block, which is, of course, the portion of the show we break down what's moving, what caught our eye in today's options activity, and what was interesting from a UA perspective. Maybe you guys listening live at home or there on Twitter, you have some questions, some names you want us to take a look at, let us know. We love to hear from you guys. A couple people mentioned that some of the chat may be coming in and out. Let us know if that's an issue with you. We'll see if we can fix it on our end or if it's perhaps on your end. You never know with these myriad different connections we have going on via here and via Skype and via everything else that perhaps something is sucking up a little bit more bandwidth somewhere else, or it could be perhaps on your end. You never know. These things could be user error as well. As we move on into our first name here in the old Odd Block, this is a name we haven't talked about in some time. This is Restoration Hardware, ticker symbol RH. Closing today right around 38.5, off a whopping 26, almost 26%, or about 13.5 handles out there. So not the best day for good old RH. They, of course, have been averaging of late about 3,800 contracts a day. Today, doing a whopping 19,000. Surprisingly, given the severity of the downside move out here, it wasn't as one-sided in the paper flow as you might expect. Only about 1-to-1 calls over puts, pretty even. So that wasn't what caught our eye in terms of one-sided flow. It actually was kind of even paper flow as well, Mr. Rock Lobster, which was kind of interesting. In particular, we saw some March straddles going up here on the day. I believe it was the March 40s here catching our eye out here. How often do we see straddle sellers of any type? I can't try to remember the last time we saw a straddle seller in the Odd Block. It's been for some time. We first saw him kicking off selling about 800 of these March 40s, $1.60 on the calls, about $3 on the puts, so $4.60 for that straddle. Went up in total of over 3,000 times. In fact, 4,400 on the calls, about 2,800 on the puts. Looks like a total of close to 3,000 went up on this straddle here in and of itself. Kind of interesting to see in this crazy name here that they were opting to blast out straddles. Again, Mr. Rock Lobster, I have to think. Maybe you can think of one. When's the last time we talked about size straddle sellers in the Odd Block? It's been some time.
Yeah, like months, to be honest. I'm trying to think. You know what, too, is because we've had all this volatility, and for even though the volatility has been really high, it has not attracted anybody to sell a whole lot of at-the-money premium, you have to admit, because every time you blink, it's like blows up in your face. So that could be one of the reasons why there wasn't a lot. But actually, I think we looked at this in our chat room today, kind of illiquid and a little sketchy. But I think this seller has done okay from the marks, because it looks like it's marking around $4.50 as of right now, the 40 straddle. So might not be too bad the way I sees it.
Is that your technical opinion, sir? May not be too bad?
Yeah, at least right now. I mean, they really they've knocked this stock down like what 60%. It was $100, I think, over the last year. So they got, I think, looked like a rough kind of execution, but right now it looks pretty good. So we'll see how all that settles out.
Yeah, working 3,000 straddles in a name like that, a day like today, probably a challenging feat from an execution perspective.
Yes.
If you get hit for a couple of cents here or there, I think you could probably forgive that. Even the best of brokers going to have a hard time calling up, give me the at-the-money straddle right now. Stock's off 25%.
Exactly.
You're like, yeah, sure,
I think
whatever.
they did well.
Yeah.
I think they did well to get what they got.
That's one of those calls you hang up on because you know it's probably some BD from across the way trying to just pick you off on some nonsense. I'll get back to you later, sir. He just wants a straddle run. All right, moving on to our next name, our next victim, celebrity. Call them what you will here. Still haven't figured out if it's a good thing or a bad thing to be featured on this segment. Probably a little bit of both. In the case of our last name there, Restoration Hardware, probably not too good because the stock's taking it on the chin. But let's flip the script here to a name that isn't having heck of a lot of underlying movement, but that didn't stop the options from rocking and rolling. This is Marathon Petroleum Corp, ticker symbol MPC. Closing today about 34 and a quarter or so, up about 25 cents or about 3/4 of a percentage point on the old day today. This is the name that does about 5,000 contracts a day. Doing a little bit more than that today, Mr. Rocklobster. Doing 46,811. And if you're wondering, of that 46,811, 46,024 were calls. Only 787 were puts. So that's about a 58.5 to 1 calls over puts for those of you out there playing the home game. And in order to find this call palooza, this call apocalypse, call it what you will out here, we have to go all the way out to July. In particular, it was the July 37.5, 45, 1x2 that caught our eye. Looks like paper buying one, selling two, I believe, 15,000 by 30,000 times. So wee bit of size there, 45,000 total of that, about 48,000 or so in this one mega trade. Doing it for 2.25 on the 37.5s and 55 cents on the 45s. No open interest to speak of in either of these strikes. Certainly nothing to rival the size that went up today. So clearly, this is opening paper out here. Mr. Rock Lobster, an interesting one. Let's pull up a chart here, of good old MPC. And looking back over the past year, this name has had some peaks and valleys. It hit as high as 60 or very close to it, 59.99. Back right towards the end of the year in December. It also flirted with those levels back in summertime in July or so. But since then, it kind of has vacillated as a bit, got it down as low as about, of course, this is flash crash lows, so bear that in mind. But in late August time, it was about in the mid 40 handle. So it's had some nice vacillations, but I said today, closing 34.25, so they're well below even those flash crash levels right now, about 10 handles or so below that. Our friend here, Mr. Rock Lobster, if he was indeed buying one, selling two, then he is looking for some upside, but not super crazy upside. He wants it to go back and get back to around those flash crash lows. That's all he's asking for. He's not going crazy. He's not swinging for a crazy home run. He wants a nice triple out to the flash crash lows, and then he'll be happy. He doesn't even need those highs of 60. In fact, if he gets there, he's probably in trouble. So he's looking for a nice 45 handle. What's your take here, Mr. Rock Lobster, on this, shall we say, a little bit of size in this 1x2 in Marathon Petroleum Corp?
Yeah, haven't we seen these types of trades ever since oil has been sliding down? Remember there was a butterflies in Anadarko. There was trades in Exxon where they're trying to do these low-cost option trades, looking for a bounce and to have a giant home run. And I don't know. I guess eventually they might be right. I don't know. All I notice is that the premium outlays are going a lot lower than they used to be. I remember, like $3-4 for some of these flies, and now this thing's down to about 50 cents or something like that, $1. So again, they're looking for a bounce eventually, just not right now. So yeah, that's what the trade looked like to me. It could be kind of a also, if somebody buys stock, it is a way, it's what we call like a repair trade where, let's say even if they bought stock lower, and then they put the 1x2 on and try to juice up their returns on the upside if they get a move up. I think it just overall looked very bullish. I just don't see how the trade could be the other way, where they were buying the 42s and selling the 37s. It made zero sense to me on how that would make money.
Yeah, that would be kind of odd unless they had, if they were selling one, buying two, and they had a ton of stock, maybe they didn't think it was going to pop near term, and then in case they did, they had that. But yeah, I definitely agree. I think it's 1x2, the traditional ratio way. We don't say front spreads, back spreads on the show. I don't allow it. I hate that terminology. So we shall move on from that here. And if you're talking, all these names we're talking, they're in the $33 range, $45 range, even the $37 range. If that's too rich for your blood, you're saying, give me some cheaper stocks that can really, really sling and swing for the fences with. Well, we got you covered with Cypress Semiconductor Corporation, ticker symbol CY, closing today a whopping $7.86, up a nickel. So rallying hard today, about 0.6%. This is the name that does decent paper for a cheapie, about 5,500 contracts a day. Today, doing a substantial amount, doing about 29,000 contracts out there, fairly active, also pretty even, about 1.5 to 1 calls over puts. And what caught our eye out here today, in fact, the reason that it was so even was the trade that caught our eye. Had got to roll all the way out to the SEP expiration cycle to see this one, and it was a size version of one of my favorite trades, ye old bullish risk reversal in particular. It was the SEP 610 risk reversal paper coming in, selling 12,000 of the SEP 6 puts, and then buying 12,000 of the SEP 10 calls. These two strikes are pretty much equidistant. It's about 35-45 on both. He did it for about a nickel. I'm not sure how he did it, Mr. Rock Lobster, if he did it put over or call over. Either he collected a nickel or he paid a nickel. I'll have to dig into these spreads because these both are, it depends on the execution here. Total of about 12,000 on the puts and a little bit more. He actually bought a few extra on the calls, about 13,000. And of course, nothing really open, about 180 and 40 contracts open respectively on those strikes. So, Mr. Rock Lobster, take us home. What's your take on our friend here, and how did he fare in your guys? I know you only like to do risk reversals really if you can get paid for it. So did he collect that nickel or did he pay it and thus incur your wrath?
He had to pay the nickel and he slightly incurred my wrath. Slightly. There's a slight incurring of wrath. What I found most interesting about this trade is there is no skew in this Cypress Semiconductor. The puts are trading average vol was about 50%, and the calls are trading around 48%, give or take. Not that much. So the customer had to sell the 6 put in order to finance the 10 call, which normally you could sell a farther out of the money put to finance the call. So it just from the perspective of kind of how the skew is sort of bent, it's not overly bid to the put, so they didn't get the best price. It looks like to me a stock that the market is just not pricing a lot more downside in it because there's not a big charge for the puts. So I think this actually is a decent risk. I mean, a nickel's a nickel. But the stock is down quite a bit from its highs of the year. I think it was like a $14 or $15 stock at one point. So, and they pay a regular dividend, 11 cents. So I don't think you get a lot of huge growth there, but a 44-cent dividend a year on a $7 stock, either they're going to cut it or it's yielding like 4.5% with, I guess, some sort of potential for upside growth, which is what this particular person's saying. But as far as for the year, it was $10, traded as low as 6.5 about 3 weeks ago. So my guess is they're looking for El Rubber Biscuit bounce on this one.
That would seem to be the way. And isn't it funny how fickle the rock lobster is, ladies and gentlemen? Just a plus or minus of a nickel can turn this trade into a thumbs up or a pure umbrage thumbs down from the rock lobster, depending on if you paid or if you got paid. The man likes to get his juice for free or get paid to eat his juice, or drink his juice, which is always a better way to go, I think.
I think so, but a nickel, I mean, it was just $10. I think this is I'm just gonna go on a limb. I'll bet you this guy makes money with this trade. Or girl, whoever. This person, the trader, the investor. I think they're gonna get their nickel back.
Nickelback, your favorite band. As we look here at the chart, this one isn't too outlandish. I mean, looking back over the past year, the saga that was Cypress Semi, they were, of course, a wee bit higher about a year ago, back in the March timeframe. They were trading about 15 half, so roughly 2x where they are now. Our friend here obviously looking for a return to at least a shade of that former glory, getting back into at least the high single digits, if not beyond, for this name here, and willing to put a nickel where his mouth is to do it. All right, and it is Thursday. That means it's time for you guys to take the reins. I've saved some extra time for you guys today on the show because I do like to hear from you guys. If you are listening live and for some reason you don't have a Mixlr account, you don't want to open one, you can still tweet us your questions or get us on Facebook. You can try email, but I'm not sure if that'll get to us in time to answer live on the show, maybe next week. But if you want to hit us up live and get your questions answered in time, we got a bunch to do here, but once in a while we like to squeeze in some live ones too. So if you got some, send them in. We'll see if we can fit you into the queue as we keep on rolling into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the name implies, this is the portion of the show where we break down some of your questions. Let's let the inmates run the asylum take over the show with your questions, your comments, not just for us, but to share with your fellow Option Block listeners and devotees out there. No shortage of ways for you guys to do just that, including probably the easiest way, surf on over to the mothership, theoptionsinsider.com. Post a comment or a question there via the feedback form or via the comment system, and we'll be sure to see that. Or, of course, on all the different social media platforms, twitter.com/options, facebook.com/theoptionsinsider, or Options Insider on Stock Twits. Doing a lot more on Stock Twits these days, so all of you Stock Twits devotees out there, we can get some content out there for you as well. We've had it for a long time. For whatever reason, we weren't posting to it as actively, but now we've addressed that wrong. A lot of you guys always asking us, how come you don't use Stock Twits more? Well, now we're reaching out to you via that platform as well, and of course, it's all baked into our mobile app, so you can send us your feedback, your questions, your comments there, or, like I said, the old-fashioned way, questions at theoptionsinsider.com, just like our friend here did, kicking it off with Matt M1000. He writes, "Hello, Mr. Longo and the All-Star cast. I have been enjoying the Option Block and Volatility Views shows for years." Well, thank you, sir. You are a man of exceedingly good taste. He goes on to write, "You guys are the best. Keep up the great work. I would like you folks to discuss the, quote, put-call ratio, its use and merits as a tool. I have always discounted this metric's value since both put and call options could be either bearish or bullish, depending on how they are being used." He puts, i.e. purchased or sold. "So what logic I have leads me to believe a put-call ratio would be pointless. Set me straight on this, please." And he goes by, actually, Beanbag. So Matt M, a.k.a. Beanbag, that's a good question. We've discussed this on the show, and I've discussed it before on this. I think that's kind of the most frequently cited options indicator out there, and as a result, I've said many times, I think it's very much overblown. And if you just look at certain names and say, okay, here's the put to call, you're right, it doesn't really tell you the whole story. You don't know what the paper is going on out there. It could be an aberration where someone came in, you're right, and blasted out a ton of short puts to get long the underlying at a certain level. And if you don't dig into the open interest, if you're not familiar with the paper flow out there, you would never know that. You would just look at that indicator as a whole and say, oh, well, therefore it's heavily bearish when it's actually the opposite. Or they could have done things tied to the underlying in some ratio that you're not aware of. And so their intent is kind of hard to ferret out. So I'm with you on that. In aggregate, I think I find it more useful in some of these other names. Like we actually talk about the reverse a lot on volatility views, the call to put ratio for things like VIX, because VIX is always traditionally very call heavy. It's at least 2.5 to 1 on any given day. When it starts getting into some interesting territory like 3.5, 4.5 to 1, that's when things start getting interesting. So I kind of use that as more of a barometer. And I think that's probably the best use case. Rather than an indicator of any sort of sentiment in the underlying or indicating of any sort of direction in the underlying, I think it's better, it's more useful as a flag, as here's one flag that goes up to kind of alert your antennae as something is afoot in one of these names. You see this large, let's say, put-call ratio in whatever name there is. If it's a name you're interested in, it's worth investigating to see a little bit more about what's going on out there. And that's where you start using the options knowledge you've accumulated by listening to these shows and by doing your own homework and your own trading. And you start ferreting out the open interest using your broker's tools or some of the tools we talked about here, like, Live Vol and Trade Alert and others to help you break down what's actually going on behind the scenes of that open interest. And then you can start ferreting it out. But you're right. I agree. Just kind of throwing these things out willy-nilly. Oh, the put call is this, that kind of thing. I don't think there's a lot of utility there aside from it being kind of a flag, a first thing to catch your attention to alert you at something else, perhaps maybe afoot, a key word there being perhaps. But that said, this is a conversation, a lively debate. There's always room for point, counterpoint. Let's toss it over. Let's see. Maybe Uncle Mike. Let's see if he's deep into. Are you a big devotee, sir, of the put call ratio?
I hate, as much as I'd love to create crossfire and say umbrage, I think I almost agree with you on this, Mark.
Oh, no. I'll hang up on you, sir.
Oh, it's horrible. But I want to just tell a story. I think it was like my second year in the business. I remember I was working as the director of education at Options Express, and I was not one who was, I had not yet earned my stripes, so to speak. And I was not the one that they called for quotes in the Wall Street Journal. But when my boss was on vacation one day, they called me for a quote for the Wall Street Journal on an earnings announcement. And there's some heavy option activity in the put options right before earnings. And from what I remember of it, the stock that they were talking about, I believe it was Intel, was trading at like, I don't know, I don't remember what the price was at the time. This was, almost 10 years ago. Let's say $26 a share. And so they're asking me about all these put options that traded at the 22 level, and earnings were coming up like in 2 days or so. So there's all these put options. I mean, it would have been a modern day odd block amount of puts that were being traded. And this was before the technology that we have today to see the order flow that we do. But I remember looking at it and I'm thinking, okay, the straddle on this, the at the money straddle is trading like at maybe $2 or something like that. So maybe it wasn't even that. And all these puts went up like this far out of the money. So I said, well, in my opinion, unless someone has some type of crazy insider information, which I doubt, because no one with insider information on something like Intel would be this blatantly obvious, I think someone's just selling all these puts. And I think this is a bullish move. And so they're like, oh, a bullish move. And with puts, how can that be? I said, I think people are selling these puts as either a way to just get some cheap premium, some easy premium, so to speak, at least in their minds before the earnings announcement, or they're very happy to own Intel if it were to drop this much on this earnings announcement that was coming up. So the reporter thought that was just insane what I was saying. So, oh, okay, I'll print this. So they printed it the next day. It's in the Wall Street Journal. Mike Tusaw from the firm I was with at the time thinks that this is actually a bullish maneuver before the earnings. So on my voicemail that day, there was a voicemail from someone from the International Securities Exchange saying, hey, Mike, this is so-and-so from the International Securities Exchange. I really need to talk to you about that quote you made in the Wall Street Journal today. I'm like, oh no, what did I do? My boss is still on vacation, and I don't think anyone at the firm even read the quote yet. So I'm thinking I just said something horrible, but the guy calls me up and said, finally, Mike, this is like the first time anyone's ever said anything logical about put and call activity. Thank you. I just wanted to personally thank you for digging deeper instead of just saying, oh, there's a lot of puts. Everyone's bearish. So with that, I agree with you, Mark, that the put call ratio is a flag, but if the flag is raised, make sure that you look with great intent or with great detail on the other flags that exist within the first flag being raised.
That's why we do all the work that we do on the unusual activity. You know, the volume is just a start. It's just a flag. And you have to dig in and ferret in and see exactly what they did, where they traded it, what the open interest is, what the historical open interest is, when they opened it, when they closed it, if they are opening and closing, what the implied vol is, all that kind of fun stuff. There's a lot more that goes on than just saying, okay, buy 10,000 calls on the upside, aka the client customer paper is bullish. It doesn't really work that way. And same thing with the put call ratio. To kind of use your head on this kind of stuff. Mr. Rock Lobster, in general, what's your take? Thumbs up, thumbs down on the old put call ratio?
I'm going to be thumb sideways on the put call ratio.
Oh, you diehard fence sitter, you.
I think when there's a lot of volume, I like to look and see what the volume is. So, if the put call ratio is high, but you never know if they trade stock against it, or you at least look for the stock prints or something like that. But anytime, and I, as a trader, just, okay, if somebody comes in, they buy 5,000 calls, and then the stock goes up in 2 weeks, you're like, duh, or, so when there's usually size paper, there's a reason. So that's all I say. That's why unusual activity is interesting, because it does, people that have industry knowledge or whatever, or they just know that some big print's going to happen, who knows why. But I think it's worthwhile always if there's a lot of paper. But put call, I would say VIX is usually interesting for that when people are just piling in. But a lot of times it's kind of it seems to be like a lagging indicator, not a leading indicator. Okay, the market's crashing and people are buying a lot of puts. Well, okay, I got that part. I'm mostly interested in when you see the counter moves. Market's selling off big, and all of a sudden, people are starting to dump that downside skew. So, it is an interesting number, but I still think you have to see which side of the bread is buttered this way.
Yeah, exactly. It's kind of it's a starting point. It's not an ending point when it comes to your investigation. It's a sign that something is afoot, and you must dig deeper. The game is afoot, as our friend Sherlock would say. Moving on to another question here. This one comes from SkyTrader. I guess he trades them up high. I don't know. Maybe he trades cloud futures. He asks, hey, if I see a trend, what spread works best for capturing that trend? Straight vertical or calendar? Interesting question. It really, he doesn't illuminate too much what kind of trends he's talking about. So I guess we can kind of break it down, because that's kind of where these spreads have more utility in one scenario versus another. I think in most generic 10,000 foot level terms, if you're seeing a trend that's a very aggressive, a very near term, like it's happening today, something like the name we were just talking about on the odd block, selling off 25%, you got to get in and get going. That's where you probably want a good vertical on your side, because that's going to work pretty well. Obviously, it depends where you structure it, at the money, out of the money, things like that. But in general, a vertical is probably going to suit you well in that space if you're trying to buy a spread, capture some movement, et cetera, that sort of thing. If you're talking a more longer term trend that's going to play out over 3 months, 6 months, a year, or something like that, then, like the name implies, a calendar spread probably going to suit you well in that scenario. Like we said before, though, that's kind of where you have to do that little bit of a delicate dance, that trade-off between longer-term vol, shorter-term gamma. You have to make sure that your spread is suitable for the environment. If you're long it, you got short gamma. You don't want to have things rocking and rolling too much in the near term, but you need some bang for your buck later on, and vice versa. So there's a lot of nuance that goes into setting up the calendar spread, which is why there's never really any blanket advice, I could say. But in general, that's kind of the way I would utilize those two different types of spreads. Let's open it up for a point counterpoint. Uncle Mike, dive in. Have at it, sir. What do you have to say to our friend here, Mr. or perhaps Mrs. SkyTrader? How do you like to capture trends, and which spreads work best for which one, straight verticals or calendars?
I think it has to do with your sentiment on volatility, which spread you would like to do. Right now, I believe that implied volatility is higher than it will be a year and a half from now. Being the bull that I am, I think vol's always going to go down. The market's always going to go up. Not really. But just for example, I'm not doing any diagonal spreads in SPY. And the reason is that I feel it would cost me too much money to buy the long leg. And yes, I would get generous premium in the short term, but let's say that this volatility, let's say the market goes up and volatility goes down, then next month, I'm not going to get as much premium for my short call as I did this month. So I like to look at it not so much for the trend, but from your sentiment on volatility. If you're of the belief that volatility is going to go down, then I think a vertical is a better way to go. If you believe that vol's going to come, if anything, vol is more at the lower end, then I tend to favor the calendar or diagonal style trades. And once again, that's very much a 10,000 foot view. There's a million, well, what about this, that we could go through, but from a 10,000 foot view, when making that decision, I base it more on my sentiment on volatility.
All right, Mr. Rock Lobster, have at it, sir. We have to say for our friend here, Mr. or perhaps Mrs. SkyTrader.
I think Mike hit it on the head. So you are a trend. If you're looking for a trend follower, I view the time spread as more of you're looking for a lift and vol, and really you're kind of trading what I'd say sort of more away from the market with the time spread. What I call, like you want the vol to lift a little bit, and the underlying just to float to the strike, up or down. So for instance, like it makes a good index put calendar when the vol gets really low and we just rally hard for like a pullback trade. That's when that makes a good SPI, like an index put calendar. Vertical spread works better if I think you're looking at that move is kind of quick. It's going to like rip up to the short strike, and then you can close the trade that way. And you do have a little bit of short vega by the time you get there. So one trade actually has a little positive gamma, meaning it likes the underlying to move a little faster. The time spread doesn't like the underlying to move as fast. So, I mean, if you're trend following, and options, since they have expiration dates, the timing for whatever the position is important. So I would just think of it that way. The vertical works better because you've got the same term. You're in, you get your move, you sell it, and you close it. The time spread has that extra moving part, extra vega part you might not necessarily want if you're trying to follow a shorter term trend.
Yeah, it's our 10,000 foot view on it. Obviously, we can give you more nuanced thoughts if you give us exactly what names, which underlyings, which type of spreads you're looking at. But in general, that's kind of how they break down 10,000 foot. Crazy things are falling off the earth, probably near term, short duration stuff, probably a vertical, longer term, probably a calendar. And then, of course, if you're looking at some of the volatility trends, you can look at it that way as well. I know how listeners, usually when they mean trend, usually they mean underlying. I know how they think. But once in a while, we have the nuanced folks thinking vol as well. Speaking of trends and things, we have been running a lot of fun questions of the week over there via our Twitter handle. And this week's question of the week is, how do you prefer to trade earnings announcements using options? And if you guys haven't participated, by the way, you still have time. I think it goes till the end of the week, so about another day or so on this poll, hence the question of the week. So if you haven't had a chance to fill in your votes, then do so. Surf on over to @options on Twitter and just cast your vote. Your choices are long premium, short premium, I avoid earnings, or other, and you have to explain yourself. The other one's always low because people don't like to explain themselves, but we want the people to voice their opinions. So don't cheat, Uncle Mike and Rock Lobster. Turn off your Twitters so you can't see the results for yourself. And I'm going to have you guys play the guessing game. Let's start with Uncle Mike. What do you think is winning so far? Because it's not done yet. We have long premium, short premium, I avoid earnings, or other.
I'm going to go with I avoid earnings.
Interesting. And Mr. Rock Lobster, where do you fall?
I am going to say I avoid earnings.
Wow, the two of you speaking to the nuanced people in our audience. See, me being the diehard cynic, I thought instantly that the dark side was going to lead the charge. It's going to be all short premium all the time. I hoped in my heart of hearts that they would say I avoid earnings, because that means they've been listening to this show for a while and they know kind of the stuff we talk about, and kind of avoiding that Niagara Falls-esque event of falling off the cliff from earnings. You can trade before, trade after, but the event itself, a bit of a turbulent mix there. And I was surprised to see how it's shaken up so far. 56% saying they avoid earnings. So there we go. Diehard listeners of the show there. You guys knocking it.
4-1 for the good guys.
Knocking it out of the park on that one.
Guys.
And then followed, surprisingly, number 2, long premium, 19%. I still have a hard time believing that. More people, according to this poll, buy premium than sell premium going into earnings. I would have to wager it's probably the latter. Only 15% saying short premium and about 10% saying other. So there we go. That's the results of our this week's. That's not the results. It hasn't closed yet. That's so far how things are shaping up. If you don't like those results, you want to make your voice heard, head on over to @options on Twitter to do so before the end of the week, and you too can be part of the great options question of the week. Really quick, guys, we had our one last week. How many options exchanges do we need? We have the results closed now. The choices were 14 is perfect, the more the merrier, make it stop, or other. What do you think won?
Make it stop.
Make it stop.
Yes, 62%. You guys are good at this. You should do this for a living. Poll prognostication. 29%, the more the merrier. 5% says 14 is perfect, and 4% for other. Well, I'd like to wrap it up. We only had one more question of the week. We started a couple of weeks ago. The first one we ever did, because it was the height of earnings season. Should options trade after hours? The choice is heck yes, only in major names, no, poor liquidity, or no other. What do you think won, Mr. Rock Lobster?
I'm going to say no, poor liquidity.
Mr. Tusaw.
I would vote only in major names, but I think the winner was heck yes.
Going for the heart and the mind, eh? Well, in this case, your heart, I'm not sure which one it was. Whichever one voted with the majority is the one that won. Heck yes, 53% taking that charge. People want their after-hours trading. Only 15% saying only in major names. 15% also saying no, poor liquidity. I think those are probably a lot of the pros floating around in our audience who don't want to deal with this. And then 17% saying other, with some interesting other suggestions. So we do that every week. It's kind of fun. Make your opinions, your questions, your thoughts, your ideas known. If you have a question you think we should ask over there, the question of the week, send it in. Maybe we'll use it in a future question of the week. But now it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, welcome to Around the Block, the portion of the show. We tell you what we're watching, we're keeping an eye on for the rest of the week into the old weekend. A light week when it kind of coming to the tail end of earnings season. We got a few names like J.C. Penney and others floating around out there tomorrow. A couple of people actually out there have written to us about Twitter, about J.C. Penney. So apparently, at least a few of you out there trading some J.C. Penney. So interested in that one. Hilton, who knows? So not the most exciting part of the earnings season, kind of coming to a close there. In terms of numbers, not a heck of a lot really moving the needle eye. We got things like GDP and consumer sentiment coming out tomorrow, but nothing really of serious note out there, at least not for a little while. So it's kind of all a little bit in the interesting realm as we're all kind of watching different things, I'm assuming. Let's start with you in the land of St. Charles, Uncle Mike. What are you keeping an eye on for the rest of the week into the old weekend?
200 and 120, SPY 200, GLD 120. I want to see if we can break those numbers. I think those are big barriers at this point. And with the bears that have been in charge so far this year, that's going to be a big hurdle for the bulls to cross. So I am laser focused on those numbers.
And if we cross those numbers, is that it? Buying calls all day long, baby?
Not all day long, but definitely more frequently.
All day long. You heard it here first. As I put the words in Uncle Mike Tusaw's mouth, he is doing nothing but buying calls all day long if we hit those levels. Let's turn our attention to the hinterlands. Mr. Rock Lobster, what's catching your eye for the week, the rest of the week, I should say, into the weekend?
Well, I like to see the trend in volatility that started keep going. Are we going to see the 1800s or the 18 handle in VIX? We could see it tomorrow if we don't get some knee-jerk central bank announcements. So that's basically, as long as we don't have that goofballness, I think we'll do fine. And I think it will be closer to Mike's action up there. We definitely having a hard time at this level.
All right, listeners. That's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, one last time, let's check back in with my cohorts, my partners in crime here on the old All-Star panel. See what they have cooking that may interest you. starting off with Uncle Mike. In addition to buying calls, he also wants you guys to go long. Uncle Mike, why don't you tell them how they can do just that?
Well, buy my book, please. Go to Amazon, Go Long, New Option Strategies for Buy and Hold Investors, second edition. 2 new chapters on portfolio margin as well as weekly options. But I'm going to do something today live on this show that I've never done before on this show, is that we have the ability, if you're a self-directed trader, meaning you call your own shots, like most of our listeners probably are, we have the ability to help you trade through TD Ameritrade at 35 cents per contract with no ticket charge. Now, we charge a small percentage. That's how RCM makes their money on it. But I'm going to make a special offer for everybody today that's listening to this show right now. If you email me or call me within the next half hour, I will give you the first quarter for free. You will not be debited a fee in your account until July, meaning that you'll still pay the commissions, but that is the RCM deal that we're having just for today. If you email me or call me and say that I am interested, my email is mtusaw@rcmfs.com, or call me at 312-212-3531. And I want to reward our live listeners because this is a momentous occasion.
Wow, that's a pretty good deal, listeners. You should check it out if you haven't talked to Uncle Mike already. Even if you have, give him a call. Check it out. I repeat that number, but I don't know it, Uncle Mike. Why don't you repeat it again one more time?
312-212-3531.
There you go, listeners. Check it out while you still have time. You got a half an hour. Clock is ticking. So you listening in the on-demand version, you got an incentive now. You never know what sort of deals are going to pop up here on the live version. So tune in via the Mixler. And, of course, Mr. Rock Lobster, do you have any commensurate deals to offer our live listeners out there in the land of the pit?
Well, I'll tell you what. You call me, I'll give you 25% off our gold class, off the posted, off what our posted rate is on our website. So you write Andrew at optionpit.com, send me a note. What do they post this tomorrow? So Friday afternoon, you send me a note, Andrew at optionpit.com. I'll give you 25% off our gold class. So if Tucson is going to give you 25% off, I'm going to give you 25% off, because that's how we do it here at the Option Insider Global Media Conglomerate.
I like it that you are now representing my global media conglomerate. So I also like the way you think about a global media conglomerate. I'll have to upgrade our corporate title to global media conglomerate. That's not at all audacious or obnoxious. That'd be good on a business card. Mark Longo, founder and president, Options Insider Global Media Conglomerate. I like it. I want to do it on a card just to see people's faces. I like the way you think. So surf on over to optionpit.com or contact the Rock Lobster, Andrew, at optionpit.com to take advantage of those deals. And there you go, listeners. If you're listening after the fact, incentives, strong incentives to tune in live here via Mixler. Surf on over. MixLR is the app, or you can find it. Just search for Mixler. You can follow us on Twitter or on Facebook or on StockTwits. We also put the links out via there. Every Monday and Thursday, 3 p.m. Central is what we're going to do. That said, I'm going to be traveling next week, so we're going to see if we can get the live thing going. Hopefully we can. We'll have a show for you. Whether or not it's live streamed, I don't know. So that said, after all this hullabaloo about live, we may have to take it off next week. But we'll see. We'll try to get it going in some capacity for you. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, for sending in such great questions. Keep them coming. And, of course, for tuning in live. Love you guys there in the live chat as well. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.